Hey everyone, welcome back to Corporate Decoder. Today, Berkley Corporation, WRB, just filed an 8K reporting on their annual meeting, and I'm seeing some interesting results in their director elections and shareholder votes. Quick note, this is not financial advice, just my take on public filings for educational purposes. The real story here is how shareholders are voting on the company's leadership and executive pay, and the results show a strong endorsement. So, Berkley Corporation, WRB, recently held its annual meeting of stockholders on the 3rd of June 2026. Now, typically these meetings are where shareholders get to vote on important company matters. This particular filing is an 8K, which is a report for big, unexpected events that shareholders need to know about right away. The main points of this filing are the results of their shareholder votes. They voted on electing 5 directors to the board, a non-binding vote on executive compensation, which is often called a say-on-pay vote, and whether to keep KPMG LLP as their independent auditor. Let's break down what these votes actually mean. First up, the election of directors. Imagine the board of directors as the captains of the ship. Shareholders are essentially voting to keep them at the helm or choose new ones. In this case, all 5 director nominees received a significant number of 4 votes. For example, W. Robert Berkley Jr. received over 344 million votes in favour, with only about 3 million against. This shows pretty strong confidence in the current leadership. Andrew J. Carrier also saw a similar pattern with 343 million. For votes, Mara Louisa Fair had a bit more opposition, but still a large majority in favour. Daniel L. Mosley and Robert A. Rusbolt also passed with substantial backing. It appears the shareholders are comfortable with the people running the company. Next, let's talk about the say-on-pay vote. This is where shareholders get to give their opinion on how much the top executives are paid. It is important to remember this vote is advisory, meaning the board doesn't have to follow it, but it is a strong signal of shareholder sentiment here. We see a similar story of approval. The company's named executive officers received nearly 340 million for votes against about 5 million votes against. This suggests that, for the most part, shareholders feel the compensation is fair for the work done. It is not an overwhelming landslide, but a clear majority in favour. Finally, there is the ratification of KPMG LLP as their independent registered public accounting firm. This means shareholders are essentially rubber, stamping the board's choice of who will check the company's financial books. Think of it as confirming the referee for the season. The numbers here are even more lopsided in favour, with over 355 million votes to ratify the appointment, and only about 12 million against. This shows a high level of trust in KPMG to do their job accurately. Looking at the overall picture, these votes paint a picture of a company where the shareholders are generally aligned with management and the board. There were no major surprises or significant opposition that would indicate a crisis of confidence. The company's stock symbols listed here, like WRB-P for their 5.700% subordinated debentures due 2058 and WRB-PH for their 4.125% subordinated debentures due 2061, are all trading on the New York Stock Exchange, showing WRB is a significant player. One thing that stands out is the substantial number of broken non-votes across the director elections, which were over 21 million in each case. These are shares held by a broker who has not received voting instructions from the beneficial owner. While these votes do not count for or against a proposal, their sheer volume highlights how many shares are held in non-direct ways. In essence, this filing is a report card on shareholder satisfaction with the current leadership and governance of Berkley Corporation. The results are overwhelmingly positive, indicating a stable and confident shareholder base. The risk I am watching is any significant shift in these voting patterns in future meetings, which could signal underlying issues. What I am actually looking for is continued strong alignment between management and shareholders to drive long-term value. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. Like, comment, subscribe, and join our Discord.